home is where the heart is, but when it comes to state taxes and legal matters, home is where your domicile is.
Well, good morning and welcome back to Consider This Program. I'm your host, Joe Clark.
And I'm Angi Kinser.
And Angie, why don't you tell us again what we're talking about?
I said home is where the heart is.
Okay, let's stop and think about that. Home is where the heart is for the minute, for how long?
For the time being.
For the time being,
where your heart is, where you are physical,
Okay.
That's home. But when it comes to state taxes and legal matters, home is where your domicile is.
There you go. One of the most confusing parts of understanding the 2017 tax code change that became effective in 2018 was what was called the SALT tax change. So when you look at standard deductions, they pretty much doubled for most people in 1 year. But you lost a lot of the exemptions, and your state and local and property tax was limited to a $10,000 deduction, which led a lot of people in the higher tax states to effectively move and become snowbirds permanently, right? Mm-hmm. Goldman Sachs is opening an office in Florida. I think Tesla was one of them that's moving to Texas. We know one of our investment firms that we use moved to Austin as well. Charles Schwab is moving to, I think it's Austin as well, but it's in Texas. And all of this, to a large degree, is being driven by SALT tax. So when you look at the states that had the largest amount of people leaving the state, this shouldn't surprise you. Jersey, New York, Chicago, and I believe California made the list, though they're not as high as the other three.
So is there a difference between domicile and residence?
Yeah. People will say, and in my opinion, it's mistakenly so. I have a CPA friend, Charlie Sarwitz, in Brooklyn, who's the biggest part of his practice is helping high $100 million net worth people and billionaires change their domicile. And so you'll hear people say, well, you've got to be in that other state for 6 months out of the year, and you've got to have your voter registration, you got to have utility bills, Charlie would tell you it's not as simple as that. I am not here to provide legal advice on TV or radio. I would tell you to get with somebody who's willing to sign your tax return to say this is what you need to do. But they literally, it's they call it a bump and run. You have to be in Florida. One of the things, if that's going to be your state, a certain number of days. Well, a touchdown, the G6, like the multi-million-dollar plane coming down out of the air, touching the runway and going right back up in the air. If you've ever been on to Florida and see that was not an accident about to happen. That was the touchdown, the bump and run. And that counts as a day that they have to have. So the number of days that you spend there does matter. Now, you know my life pre-2020.
Yeah.
I didn't spend 6 months in any state. Right? I mean, you got Arizona, Utah, places I have to go for business. So it's not, maintaining your domicile is not as difficult as changing your domicile, right? So if somebody's let's think about in Chicago or Minneapolis, right? And they're making, $150,000 or $200,000 a year and paying $20,000 to $25,000 a year in state tax. And all of a sudden they're moving to Florida or Texas because they get to put that $25,000 in their back pocket. It doesn't make the state of Minnesota or the state of Illinois very happy people, right? And so you're having more people challenge this, is my point.
Well, I know there's some statutory, like resident rules, but if you maintain a second home in another state that you're spending excessive time at, could it trigger residency status or?
Well, there's no state, so you got to think about it this way. There's no state that doesn't want you. Other than the exception of Wyoming. I always thought that was hilarious. We were there many, many years ago, and there was a sign that said, "Thanks for visiting and thank you for leaving." They did not want a population boom, but they didn't mind travelers coming in and spending money in their restaurants and the other stuff that's going on there. A state's not going to kick you out because you haven't shown up, as long as you're paying taxes there, right? Where states seem to get feisty is when you say, "Well, I spent 9 months in Florida, therefore my domicile is Florida." And they're going, no, it doesn't work like that, right? The Financial Enhancement Group's got families in 31 states that we take care of. We have employees in Florida, too, that work out of their house, right? In Florida law, both of those houses have to be booked as businesses. And I have to pay a fee for them to be in their houses, where you don't have to be here in Indiana. So my point being, when you hear something is free in one place, it's because they make it up somewhere else, right? All states have to have revenue. They don't let you come just because it's free. And so what you really want to do, short of saying, I want to live in Jacksonville, which is where one of the guys lives, short of that, what you're really trying and attempting to do is to say, okay, based on the type of income that I have, and when I say type, I mean source. Is it IRA? Is it the sale of a business? Is it inheritance? Is it continuing income from farm ground? What type of income is it, and what state would best fit my residency, provide me the best tax opportunity, if you're looking at it purely from a tax standpoint?
Okay, we have a listener that has a question. Is it hard to prove domicile? How would the IRS know if you didn't actually meet the requirements?
If you're an average American, it's not the IRS. Keep in mind, it's the state that cares. The IRS doesn't care because you're going to file a federal 1040, right? If you're an average American, I don't think you're going to have the issues. Where you have it is when somebody was paying over $1 million a year or over $100,000 a year to a state government and property taxes, and all of a sudden decided to pick up camp and go. And there are people where it's measured. I have a friend who I better leave the state out of it, but when he flies back to his home state where his business is still at, they know it from the airport. He is taxed $5,000 a day every day that he is in that city. And they can do that legally. California has talked about doing that where you have to pay, if you leave, where you have to pay taxes for up to 5 years after you leave, even when you're no longer there. So states there's a lot of financial difficulty going on, and people are playing these games. When the Goldman Sachs office moves to Florida and they all sell their houses and buy new houses in Florida, it's really difficult for the state of New York to go, that didn't happen. Nothing to see here, right? I mean, it did happen, and it's one of those things. But all tax policy, social policy, and everything is subject to change, right? So it's going to be really, really interesting from a political standpoint how quickly they try to change the tax code. Remember, everything is deemed to sunset December 31st of 2025. It will revert back to the 2017 tax code. So all decisions that you make today, tax-wise, need to be based on the fact that revision could occur. And if they get enough votes in the Senate to get it passed, they could actually revert that sooner. They could make a permanent revocation and go back to a tax code somewhere in between the two.
Since we're talking about snowbirds, some of the people have a hard time deciding whether they should rent or buy.
Yeah.
And I know there's pros and cons to each one, but let's take buying, for instance. If someone does decide to go ahead and purchase a home in another state, what part of their retirement should they dip into?
So I will put it this way. I'm a legal fiduciary and a legal trustee for people inside of trust. So what I call it is a financial trustee and a family friend. It's not my job to help bury people or to do things like that. It is the job of working with your beneficiaries on the financial assets to make sure that they're effectively and properly distributed. So in a brief synopsis, that's what I do. Unless you have a family who wants to buy or wants to take the place in Florida or takes the place in Arizona, I would almost always encourage people to rent because you've got more flexibility. And invariably, I see people who thought this was a great idea who end up staying there forever. They don't ever want to see the cold of Indiana again, including in May. But I've got just as many of them that have said, you know what, we've done this. We're now 85. We don't want to do it anymore. And now they've got a property they've got to sell or figure out how to transition. I don't think Barb and I will ever own property other than the house and the office building. I can't imagine it, and I love Arizona, and I want to go see my mom in Sarasota, yeah. Right? So being able to rent a place for a month, and everything we do right now is online anyhow, it feels like, being able to do that or being able to do it in Arizona. If we didn't have Othello, my dog, I probably already would have happened, frankly.
So if you do own a second home and you're paying mortgage interest in both properties in both states, do you get to deduct both of those?
You sure do. You can. So there's a cap on the amount you can deduct, and this is why we have a CPA on the team. Prior to 2017, I think you could deduct up to $1 million worth of mortgage interest. I think that's been reduced to $750. I could be entirely wrong, but I think that's the number. But yes, you can do that on two properties. If you have one of the big RVs, what they call a Class A, where you've got a bathroom and it's got to be a certain number of feet long in it, the mortgage interest on it, it's part of that deduction that you're allowed to have as well.
Would you ever recommend buying a house just as an investment opportunity?
Ever's a long time,
Well,
right? It depends on people's belief in capital and what else they would do with the money. I try to teach people, Angie, that a dollar by itself isn't very valuable. It's what you're willing to do for it, right? So when I have a dollar, unless I want to fold it over and put it in my billfold, I've got to decide whether I'm going to buy my famous coffee cup, why I'm going to buy computer equipment, whether I'm going to hire another Angi, whether I'm going to invest in a stock, whether I'm going to buy a bond and get a CD at a bank or buy property, right? And then you've got to figure out what that is. I think when you invest in a house, you've got to realize all the carry costs that go with it and some of the time. If I bought another one, I guarantee you there would be a property manager where he was getting calls at 2 o'clock in the morning when the garage door didn't work. That's just not, I'm not looking for that job. I do this job, right? We help people with their money.
Okay, I have a statement. Agree or disagree? Contrary to popular belief, renting doesn't mean you're throwing away money every month, and owning doesn't always build wealth in the long run.
100% agree, right? I used to tell students at Purdue, if they didn't know they were going to be there for 7 years, they should never buy. Very few women want to move into their boyfriend's home, especially if they already had a pre-one, and very few boys want to move into girls' homes either, right? So they end up selling 2 homes to buy another home. We had it happen 2 or 3 times in our very own company. Where it's, well, that wasn't my house. I didn't pick this one, right? What about the schools, right? And suddenly we have this whole new agenda. Hey, call Angie 800-928-4001. Get signed up for a Next Steps meeting. We can walk you through this stuff. It's different for everybody. Key thing is for you to remember that your situation is unique. The tax code's not. Your situation is. Let us help make sense of it for you. 800-928-4001 or yourlifeafterwork.com.